Welcome everyone to the Kendall Report. It is Sunday. Got a lot to cover. We got the weeklies, a little more in depth as always on Sundays. Covered the database, all the good stuff. Before I get going, make sure you subscribe. Hit that like button. We're stuck again at 33,800 subscribers. It just rotates. It's just funny. It doesn't really go up or down. It just gets stuck. So make sure you do that. Also, I'm going to tell you folks, if you haven't already subscribed to Twitter and follow me on Twitter, then go ahead and do that because I want to get to 10,000. My goal is to get to the point where we can do some live streams on Twitter. I've got some plans for that, but I only have 8,600 followers, so I'm trying to build up the Twitter. So tell your friends, subscribe. We'll get some live streams going as well as maybe some spaces going as well. Anyway, on to it. We have a fairly decent week coming ahead of us. Now, I'll start off just talking about some of the things that we're seeing coming out real quick. Let's go to the economics. That'll kind of set up what I want to talk about. On Monday, we just have manufacturing numbers coming out expecting to be this is down 4%. Retail sales is coming out on Tuesday, +3. Industrial production is flat, expected to be 0. That'll probably be negative. Capacity of utilization at 79.5, and then some housing numbers coming out as well. The big numbers that we come into Wednesday is going to be about the housing. And now I titled this video tonight, is housing going to take down the markets? And I'm getting more negative on the housing right now. Seeing some crazy things. I'll go through those details here in just a minute. So we have mortgage apps coming out, probably going to be negative at some level. They were slight uptick last week. Housing starts expected to be 1.380. Those are expected to be up, actually. We'll see if we come in a little weaker. And then permits are at 1.448 million. And that's also a plus. That's actually a negative number from the previous month. On Thursday, of course, we get the claims, 215. Those numbers continue to be really good. Continuing claims did uptick last week. We're at 1.702. I have no real opinion on which way that's going to go. I think as long as it's under 2 million, above 1.5, it doesn't really matter. I don't think it's material. And then, of course, we have LEI, which used to be a big report, leading economic indicators. Now it's a nothing report, expected to be at 0.4. Just a quick look back in the rearview mirror for a second is last week we got PPI and CPI. Those numbers were way worse. And somehow that extrapolated out that the Fed is done. We'll see if that's the case. I think as the week goes on, we're really, 3 weeks away from the Fed meeting. I think it's a little early. They would be saying anything, and the Fed's going to be very vocal. All of those presidents are going to be running around on their book tour promoting whatever it is that they're trying to promote right now. They'll be jawboning us a lot as we go forward. Let's talk about the housing situation. I mentioned this probably going back maybe a month or 6 weeks ago, where I was seeing rents in different areas just implode. Those things are still happening. All of a sudden, people are not getting, any activity on their rentals, and they're lowering the prices in some cases by a lot. And it's very interesting. And then we're seeing some of the sales numbers flattening out as well. Now, I've been not so much bullish on housing per se, but I was really bullish if we turn the clock back about a year ago, last November, and early in the year, I was talking about the home builders, and that if you were looking to buy a new house, you'd want to buy a new house because there were all kinds of buy downs and special deals, and all those things were going on. There was also a lot of building to rent going on as well. And that's probably dried up with what's going on in the markets right now. So I would suspect that we're going to see this housing situation start to erode. Now, I'm not in the camp that is saying that the entire world's coming to an end, housing's going to collapse. There's a lot of videos. I'll let those guys that are out there doing those videos have fun with that. What I do see here is some softening and possibly bringing in some effects as we come into the fourth quarter. And we're really still into the rebalancing of everybody's portfolios. Even though we finished the quarter, there's still going to be some reposition going on as we go through, continue through October, coming in November, and then we'll get serious about it in December, trying to figure out how to set up for a couple things for 24, also being an election year, and a whole lot of other stuff that seems to be coming ahead. As I've been talking about, when I go through all the technicals, there appears to be a lot of things that come in year end, somewhere in the first quarter, where a lot of these major markets are looking like there might be a shift of some sort. And as I always tell you, trading and investing is like driving, with your headlights on bright on a country road. You're looking for the next corner. And, we just came around the corner trying to figure out where it ends and whether there's a T or we need to take a left or right-hand turn. I think you'll see as I go through the technicals tonight, we're still locked in this trading range kind of scenario. Don't see any really big ups or downs right now. Certainly we have plenty of geopolitical risk, other things that could trigger the market from that standpoint. But for the most part, we're going to be traveling like we have. And so a couple of things also just talking about last week, going back into the rearview mirror, looking at the S&P was up 0.4. It's up 12.7 on the year. That's a decent year. NASDAQ up down 0.2. It's up 28.1, and Russell was down 1.5, is now negative by 2.4, as I've talked about a lot of zombie companies. Last week, 8 to 11 of the sectors were actually positive in spite of the war and the conflict in Israel going on. We're also looking at energy prices was the big bounce. We had crude up 6%. Energy sector was up 4.5%, so plenty of action there. We started to get to the banks, and I'm going to tie the whole story together as we go through this opening comments, is that the banks actually that were reporting last week came in pretty good, mostly major money center banks, the bigger players. We're coming into this week. We've got not a lot of earnings coming out. I didn't total them up. Let me just do a quick total here. We probably have about 250 earnings coming out. The bulk of these on Monday, we've got 20 coming out, and we're looking at Charles Schwab, a bunch of other banks. On Tuesday, Bank of America, Goldman, all mostly focus on the financial sector as we come in this week. And then as we get into Wednesday and Thursday, it looks like more regional, community banks, all that stuff, that junk out there is going to start to hit the markets, and we'll see what kind of action we get and see what kind of feel we get as we come into those numbers. And as we come in day to day, I'll update these as we go through the week, and I'll discuss that on tomorrow night. Like I said, Tuesday, we've got Bank of America and Goldman, but we've got Schwab and some regional banks coming out on Monday, so that's going to be in focus as well. So I think what we're likely to see here, folks, as we come into this week, I think it's still going to be very choppy. I'm not sure we're going to get any real guidance from any of the news that's coming in this week. Maybe there's some focus that starts to come in depending on what kind of things happen between the bank earnings and some of these other reports that we have coming. But right now, the technicals kind of tell us we're going to be range bound, and the range maybe will expand. We'll see what I set up here in just a minute. I'll go through the WaveTech database and some other things. I'm just looking at my notes here. I think that's it. So let's go ahead and get into the WaveTech database. That'll bring into a few more things that will come up as we go through this. All right, so this is the daily database I have up here right now at 24.34. If you recall, this got all the way down below 10%, so we're improved a little bit. We had 885 sells for tomorrow morning's opening, 676 buys, so slightly negative primarily on the 1.2 model. The weekly models didn't get hit as much as I thought they would. They did get hit. We're at 44.95. Let me click over to there. So here we are at 44.95% bullish, and we had 170 buys, 880 sells, so we definitely weakened. We're just above that 42 handle, and not really, I guess, ready to proclaim that there's going to be a protracted sideways or even a down market. But if we get on much under this 42%, this is going to set the tone for quite a bit of, quite a bit, I guess, potential sell-off. Or if we get under 42, we won't know that until next week. So we're going to operate. Everything is fine. We'll watch the action this week. And as always, when we come into Thursday, on Thursday night's video, I'll discuss what my expectations are based on the action that we get during the week and what type of activity we're likely to see in the models. And we'll see what happened. Like I said, last week, it was basically a flat week, primarily in the S&P and the NAS. They had a plus 0.4 and a negative 0.2. So in real terms, really just a flat market. Let me just talk just for another minute about what I think is happening here in the database. I'm going to go to a full screen here, and there's a little more detail I want to go into tonight. And these numbers are probably small on your screen, but there's only 3 sectors right now that on an intermediate level that have held long, and one of them is negative after being held. Consumer cyclical is underwater. Conglomerates is up 17%. It's been on for 230 days. Its average hold is 427. If you can see my cursor where it says current durations, 230 of 427. And then the other one is healthcare has been long, 179 days of 212. So it's kind of getting into long, about to go into long in the tooth. And one of the things that I've noticed when I have seen some of these, we'll call them so-called portfolio managers and people from different mutual funds and advisory firms, some of these larger advisory firms that show up on Bloomberg, these folks are telling you to buy utilities, which have been hammered, right? Maybe that's a good buy if you're trying to buy low. But they're basically putting out there these defensive trades, which kind of makes me a little nervous that that's the trade that they're putting out there. I probably ran into 3 or 4 analysts. A lot of times what I'll do, I have Bloomberg playing on a TV right behind me in my trading pit here that I have at the office. And a lot of times if there's an analyst come up, I'll click and just see what they're saying, and they're very opening lines that they have. And this is a pretty common theme. If you recall, before we had the last big surge around low 4% on the 10-year, they were telling you to go long on the buy TLT, buy long-dated bonds, and that's been a story. Maybe they were early, but I think they're more than early. There's a lot going on there that isn't not likely to be I guess, overridden anytime soon from that standpoint. But the thing I wanted to point out here is right now we've only got 3 of the sectors. Now I'm going to flip this over to daily, and we have no sectors long on the dailies, and we're down also to 26% on the groups as well, the industry groups. So nothing is in rotation is what I'm trying to get to here. So when you're looking at this stuff, and trying to figure out where you're going to roll your money to. Right now, there's not any place to go. And basically what I'm going to tell you is if you're a WaveTech or a portfolio expert user, you want to just stay within the context of how you built your portfolios, and you probably are anywhere from 20 to 40% cash, depending on what selections you made. But you definitely have some protection on right now from the standpoint of having cash. And folks, we are, many of you have met me in the last few years, but those of you that have been around and been institutional clients for 15, 20 years or and longer, there's a couple of people who have been around for a long time. You know, I've always promoted that cash is a position, and it can be a good one. And right now, cash is a really good position. You know, it depends on what you're buying, but it's earning anywhere to 4.5 to 5.3. So you're getting paid for hanging out, and that's better than most dividend stocks with a lot of risk. With no risk, your riskless rate is way up right now. So these are good times when we're starting to put cash on. So the cash is actually doing quite well. This puts me back into really going all the way back when I started my portfolio company, which was in 1998, that we got paid really well on cash. And so it was okay to be in cash. And people used to, for the last 15 years, let's say, prior to the last year and a half, people were very nervous about being in cash because they felt like they were going backwards. But but basically, we're in a good place. So let's move on. Let's get into the technicals for tonight. I just saw Chris Quire go, Crazy Kathy should date Jim Cramer. That's a good one, man. That's funny. Appreciate that. All right, so let's get into the S&P. It does look like we're trying to get a little bit of a bid to come in here. We did see markets come in a few ticks higher. I think we're about 6 or 7 higher. I'll go through that here in a minute. And basically, we've got a fib targets on the upside here on the hourly. Now, they're probably most likely going to be constrained by what's going on here with the moving averages hourly. Looks like there's a little bit of a downtrend here right now, where 43.63 is the last print. But we've got targets right now which suggest that we could get up to the 40-hour moving average, 43.99. So we're probably going to see a bunch of playing around like we did last week at the 44 handle, a little bit above 44. It looks like the constraints are going to be in that level again. So let's just go ahead and get into the daily. There's really not much here except for a typical, probably stable to slightly higher into the London Open. And then it's really being forecasted to be a choppy, quiet evening overnight from the standpoint of there's not a lot of volatility being forecasted, at least not by the algos at the moment. They're pretty quiet. So here we are on the dailies, and we're looking at, let me just, I need to fix this scaling here just for a second. So the PPMs are suggesting that we probably have basically a slight bias, but this is what I was setting up in the opening comments. It really looks like a very sideways pattern here from this standpoint. I just want to take something off here real quick. There we go. Yeah, so we've got a couple things happening in this pattern. we have a pivot that's sitting here, and I think we're going to stay on either side of this pivot number right now. And that number is, let me get you the exact number here. 4382 is the pivot. We look at the market grid for Monday and overnight and Monday. We're looking at 4342 is S1. That's actually down a bit. So I could see S1 getting hit here. So S1, R2 is 4388, R3 is 4404. And this is what I'm trying to reference here. We probably see little blips above that 44 handle. So if you look at what's been going on as we've went lower stair step by stair step, this is probably the first pattern that is here that we're going to need to see the market grid turn up here in the next day or so. But even if it does, it's just forecasting into a sideways range here, 43. If I'm going to go to the weekly, and we'll set up a weekly range here in a minute. But right now on a daily basis, you're looking at 43.15. You got a pivot at 43.83, and then you got some fib targets up here at 44.46. And that really is pretty much the ranges that we worked last week. If we just look at the high last week was 44.30. I believe that was it. Yeah, 44.30 was the high. So we're just locked in this range. Now there is some potential for it to dip down, but let's go to the weekly, because that's going to be where we're going to pick up the probabilities here. Weekly is still negative. You got PPM1 at a minus 0.26. So I guess the summary, real quick, market grid for daily, look at S1, possibility of an R3. That would be 4404 on the upside. And I would, depending on when we get hit, I would look for some volatility off those extreme numbers if we hit those. But we look here at the weekly E-minis, and we're seeing a forecast somewhat of a potential move up towards the 10-period moving average right now, which is at 4407. That's going to be, we've got a minus 0.26. That's in trend mode. So we've got, that's your rejection point. If we did print up into that 4430 level, which would be a retest of last week's high, that would be a rejection point from the standpoint of the where I'd expect to see some type of rejection. So but there's really, from a trending standpoint here, there is some really solid support. This is probably the extremes are right in these ranges here. 4273 is your 40-period moving average. We also have some fib targets on the downside that are live here. 4281, 4172, 4105. So that would be a test of the 40-week moving average, which would be similar. I'm going to go back to a second for the daily. The 200-day is a similar number, I would suspect. Here, 4248 is the 200-day. The weekly 40 is right here at 4273, just a little bit. So 4273, 4220 is the extreme in this pattern. And the way it's set up, we can work this pattern no problem. You're looking at S1, 4328. So if we're looking at the weekly and looking at the market grid, 4328, R2 is 4417, and the extreme would be 4449, which would be a print above that 4430 we printed last week. I think we just got a choppy zone here, folks. I don't see anything material unless there's something that comes out of some of these bank earnings or something goes on. To me, it looks like or the widest range that we're probably going to look at it is probably an S1 43.28, which would be about 30 handles from where we're trading at the moment. On the downside, 44.17 to 44.50 is going to be your extreme levels. And like I said, it looks like somewhere around that 44.25, 44.30 range is a potential for a rejection. We'll just have to see how it sets up. But that's your broad range that you should expect for this week. All right, so we'll go to NASDAQ. We'll start with weekly and go down. So let's just set the ranges up weekly. It's interesting because the PPM2 is still positive right now. It's at 0.25, but it's declining, and it's probably about a week away for potentially to roll over here. And what we're seeing, and this is the same pattern that we had actually in gold that I spent weeks and weeks talking about. It's this wedge pattern that I talk about this. And let me draw this in. I want to make sure you folks see this, because for me, this is like the key here for this pattern. Hang on 1 second here. Yeah, so it's this range right here where the circle is. We can work, and most likely we'll stay above this wedge here. That's the big range. The smaller range is right here. So you'll see right in this range here, which is going to put us where we've got downtrending moving averages above and an uptrend below it. Typically, we'll get sandwiched there. We'll set up some kind of pattern. Is this a wave 4, an ABC? This is X, ABC. Maybe it's something like that, forming this upward slope here in that weekly 40 is pretty substantial, and it's up at 0.63. So it's going to take, even if you look at going off, let me get rid of this so I can show you. Even if we come off here a couple of weeks off, we're still coming into early December. We still have a pretty substantial upslope on that 40. So we could work our way down toward that number, and most likely getting into this wedge formation is where we're going to end up. So let's go to the daily. So NASDAQ is much different look. As we know, it's been the leader all year. Like I said just a few minutes ago, NASDAQ's up 28.1, S&P up 12.7. NASDAQ is looking like it's got potential, some weakness coming down. We got a downslope here in the market grid and sideways projections right now. And really, this is the 200 way down here, which would be equal to that 40. So looks like we're going to start to work down. Maybe could even come back and set up some kind of a right shoulder here. And there's maybe this, like I said, ABCX, maybe an ABC again coming in here and be a elongated situation. Bear with me just 1 second, please. So that is probably the pattern that is likely to set up here. And it does look like it's, I wouldn't call it super negative, but it's not positive either. It's just, this is the whole, I think if I was going to put up another thumbnail for this broadcast tonight, would be, markets to continue to chop. But there is some downside risk coming in. And this is showing up on the S&P and on the NASDAQ as well. Just coming in, especially on these weekly ranges. All right, let's go to Russell. This is daily Russell. This is the futures RTY. What an ugly chart, right? It just continues to move lower, just stair-stepping down. And we've got a couple of things here to watch for, and primarily is if we can get a higher close today, then we could trade back into this wedge again, this downward wedge. We got right up to the 21. I recall talking about this last week, the 21-day moving average. This is a daily chart, which was the 21 was 1800, the high was 1802.70, and we rejected off of there. The next day was, the high was 1800.9, and the 21 was 1795. So we traded just through that, and this is where we got the big rejection off of that, and then some follow through on Friday. But what we're looking at here is the potential for an uptick, but that 10 and 21 moving averages are going to be your resistance. So there's no way we're going to get much of a rally. Even, I'm just looking at this value. It does suggest in a couple of days that we could get back above the 10. The 21 is looking to flatten out a little bit. So I think with all of these charts, we probably come in, and what you'll watch for tomorrow night when we come in, we want to see if a higher close today should trigger the market grid to turn up, and maybe we get a little mini upward slope in here. So really all we're looking at is choppy sideways, especially coming into Monday, probably into Tuesday's action is what I'm looking for. And just look at these key numbers that I just mentioned on here. Let's go to a weekly, see if we can set that up. See the weekly, there's actually a pivot here on the weekly to watch for, and that number is 17. Let me get here, 1708, 1708.8. So we'll call it 1709 is going to be, that's your key pivot on the downside. We're trading 1733. But once again, the algos are forecasting that this should be close to the bottom of this pattern. And if we look, I'm going to go back to this old story. We can go all the way back for a year. This is weekly. This is the same range. We're getting down toward that 1700 mark. That's where we have bounced every time, and this pattern just keeps recreating itself. And this Fibonacci target here on the downside, which is at 1708, that's your low target one. That's probably about the extreme. Maybe we could print it, but it just looks like we're in for more of the same here on this, on the Russell. All right, so we'll go to the Treasuries. Treasuries got a RTX. Let me just double check here. Close was 4.78. Just trying to, this is last week's number. Yeah, 4.74 was our RXT. So we got RXT sell. We should have been flat to down last week, which we were. We're pulled all the way back into the extreme on the downside. STX was 456, and we got to 453. So my expectation would be, and I'm trying to, let me just see if I just want to expand these PPMs a little bit. PPM 1, and I've talked about this over the last couple of weeks, is suggesting that over the next couple of weeks, we're going to see downside, and we could ultimately end up into 435 to 420 level would be the extreme. So it's interesting as we get closer to this Fed meeting, the technicals here on the on the yields are suggesting that we're going to see some downside in yields. I would suspect if that's the case, and that's going to be building the sentiment around that the Fed is done as we come into the November meeting. I'm going to reserve some comments on that until we get a little closer and I see what's going on. But the algos are suggesting that we're going to come in and possibly get through this 10-period moving average, which is 438, 435, we'll call it. It's rising slightly. And then below that, we could see all the way down to 425, 422 is a possibility here. And I believe all of these algos are basically all turning south. And I've been talking about this for a while. And the upward slope, even though the indicators are turning down, you can see the slope of the moving averages, I've been talking about, is going to be probably into first, second week of November until we're really vulnerable to start to slide below the, let's just say the 10-period moving average. And that's still up at 1.31, which suggests there's only about a 10% probability to get below that value right now, which is 438. And I'm going to mark that at 438, 435 is the extremes. Yeah, I see somebody commenting about the utilities. The utilities are, like I said, if you're looking to buy low, they might look good. Let's go ahead and take a quick look here at the 2-year, but the same scenario that I've been talking about. Is the 2 years even flattening off, trying to roll over as well. Yeah, in fact, J.M, hey, somebody give me a good symbol for utilities. I don't know a good symbol for that. If you give me a symbol, I'll cover it. Yeah, I don't want a stock symbol. I want the actual XLU. What is that? A ETF? All right, we'll go with that. So yeah, it's just and if these interest rates are going to start to turn around, because this has been a pretty ugly decline. Yeah, I would love just like the Dow Jones utilities is what I'd really like. But we'll stick with this. This is fine. But this we did get a reversal last week, and like I said, if you're looking to buy low and sell high, this is certainly low. But what's happening here is there's still a lot of downtrends. So, if you're looking to bottom fish, that's probably something good there as far as that goes from that standpoint. But there's a lot of work to be done and this is a weekly chart. And if we go off into a monthly, I mean, this thing's a disaster. Although the monthly is saying we're probably at an extreme here. And the cap is probably 59 on this spider utility fund, but it does look like it wants to improve in the next year, which would suggest, folks, that we're seeing maybe a mini peak in the interest rates, and that's the same thing that's being forecasted on the interest rates as well, showing that yields are likely to drop on a 10-year and coming into next year. So it's interesting to look at that, and that's looks like a high probability, but they're still going to carry through. I'm still going to argue that we're going to still have a upward bias until we come into second, third week of November. So we got to get through this month. Let's say a month from now is where we'll start to see maybe some cracks and where we'll see more definitive type action. Now, this is very long-term chart here. This is a monthly chart. This goes, let's just see how far back this chart goes. Yeah, it's been around. So this goes all the way back to like 20 years. So it's a pretty ugly chart from overall. Look at this. There's a lot of distribution above here. So it's got a long ways to go before we get to anything from there. So let's go ahead. Let's get to crude oil. Let's just stick with this monthly chart since I already had a monthly selected here. It's interesting because crude oil appears is going to just stay in this sideways range. We're probably looking at the upper end. This is a monthly chart, so we're looking at long term here, right? So probably coming back in towards the 80 handle. I've been talking about 75, 85. We've printed up to 87 with the situation going on in the Middle East right now. There's a lot of folks, a lot of saber rattling going on at the moment. So it's going to stay elevated up at the upper end here. But if we just look at the market grid for the monthly here and bring that up, look at the range. Let me just get the high low here. So I'll have that 91.88 and the low's been 81.50. Okay. So if we go to the market grid here, we can see 82 is S3 and R1 is 93.24. So we didn't quite make R1. Maybe we just doing basically an S3 R1. But I think overall, if we look at the middle zone here, 75 to 80, 82 is where this is likely to maintain itself on a longer term basis. So let's break down. We look at the weekly, and I told you in the last couple sessions that we've had together, I told you that we're looking at the more of a stable market. I don't see anything really running away either way, either up or down. Everything's being forecasted to be pretty much in a sideways range. We have an upward grid formation here on the weekly. If we just look at the market grid weekly, we're looking at R2 is 91, R3 is at 91.48. That would match up with the monthly numbers for October. And then on the downside here, we're looking at 80, 85.90, 83.90 would be probably the extreme. This is weekly crude oil. But the forecast is for the potential for at least a couple more weeks of upward pressure here. So we should ride along this 10-period moving average here at, let me just get these numbers for you. Around 86.31, 85. So that's probably the bottom end. 83 is going to be the low print if you get to that level. Take a quick look at the daily. Daily's got an upward bias once again into the end of October. Makes sense. Let me just fix some of these. The scaling is not rescaling right, so bear with me. Yeah, so we're looking at upward bias on the short term, maintaining around this 85 level, probably 90, 91. We have fib targets on the upside all the way up into 92.39. There's three targets here, 90, 95, and 92.57. Kind of maps out with the other stuff on the weekly and on the monthly as well. Oh boy, Peter Schiff had a good week, huh? Look at this rally in gold
all the way up to 1937. This is kind of going up into the extreme. This is the daily. You see we're due to peak out here. Probably set up some consolidation right around this 200 period moving average. But what a rally. Let's go to the weekly, because this was the numbers that I was really focused in on. And we got that forecast. If you recall, folks, these indicators, the algos were suggesting that the week of October 2nd was going to be the bottom of this pattern, and that we would see upward prices from there. And boy, did we. We got a rebound right back into those moving averages. I thought we would get up there. Usually it takes a couple of weeks, but, hey, lots of excitement with the geopolitical stuff. And you caught a really good bid here. Now, it doesn't look like it goes anywhere. It looks, we did get an RXT sell signal. So that suggests that we go sideways here. Probably see the market grid turn down, not this week, but next week. So let's look at the market. These are weekly chart here on nearest futures gold. Okay, so let's look at a couple things. So we're looking at R1 at 58. Let me get sorry, I have to go back and forth. The high last week was 46. So we're looking at R1 58 as we come in to the weekly. This is a weekly forecast. So R1 is 58. R2 is 1977. So 1958. And I remember talking about getting back up in around 1960. Well, we did that. And the S1 is 1924. That's going to be a fairly tall order. Maybe we get some volatility here or something that comes in. But it looks like that actually this rally will stall, and just all we've done is rallied right back into the range again. So I think ultimately this will turn down, not this week, but next week. We have the market grid turn down, then we set up a range, and that range is going to be probably around 1900 to the 1960, 1980 levels up at this upper end of the grid. But if you look at these moving average forecasts, they're just forecasting flat to sideways. So basically got all the way down to the 200-week moving average, which I was screaming about for weeks. We had a Fibonacci target down there. There was a WaveTech Fib target down at that level. Let me just bring that up. Yeah, we were looking at 1826. The 200 at the time was 1819. I remember talking about these numbers that we should bottom. The algos were suggesting that we're going to get a low on that bar. It did. And now we got RTXL, so it's sideways for 1 to 2 weeks. Set up some consolidation, but it looks like we're going to set up just a broader trading range here. And I would agree that you should see rejections around any of these numbers that I talked about, especially the upper end of this range here. I'm just trying to get to the market grid. Yeah, look for that S1, R1 number, 1958, 1977, R1, R2, probably where you probably do see a rejection. Just come back and there'll be a quick trade there if you're trading gold. All right, so we'll do Bitcoin be our final market. And Bitcoin continues to hold at 40. I'm just going to blow this up so you can see this a little better. This is pretty significant. You see this rising 40 is coming through this what I call a bubble formation here in the market grid. And what we're looking at is a nice angle of attack here. We've spiked below it, but there's been no closes below this line. We came close to it on the 8th. This is a weekly chart on the week of September 18th. And then we went through it again, and we're looking at this week of October 9th, which will end at midnight Eastern time. There'll be a new bar we come in tomorrow night. We should see that angle of attack continue as we're looking at PPM3, which is this third indicator down, is right now at plus 0.93. PPM2 is 0.05. So it's got a slight bias to the upside, but that's the number to watch. There is the 26,824. We got down to 26,533 low and bounced off. We're still hanging out above there. I think we get sandwiched. This angle of attack here on this 200 is actually fairly bullish. It should be some, I would say, almost like a magnetism for the market to move back up towards 27.5, 28,200, something in there. No real big rally at the moment, but there is a new Fibonacci forecast again here, and we've seen a couple things. Let me zoom out here just so you can see it. We had this Fibonacci forecast that came in back in July, and those numbers were 36 to 40,000, 6, 43,000, and we just moderated, and we have this one. I talked about this last week. Right now you got high target 1 right now is 31.9, 34.6, and 36,000. It does look like this is a weekly that we could see some bit of a rally as we come into the end of the month. Then as we come right into the 1st of November, flattening out. But really, it looks like we stay within the range on the market grid is what I would go with at the moment. Okay, folks, that's going to do it for tonight. As always, appreciate you showing up. Make sure you get that 30% off deal on indicators, kindlereport.com/indicators, and find out more there. You go to the purchase, just put in Kindle 30 for promo code, and you're good to go. If you bought the previous, there's some of you that haven't upgrade. I think it's like 65, 70% discount. It will recognize your username. If you don't see a deep discount, then send us an email. But it's pretty good. It's connected to our database, so when you go in, it goes, oh, you already bought them. Go ahead and give it that out. So anyway, folks, I think we've got, just to summarize tonight's video, I think we have really just a choppy week ahead of us, range bound. Look at some of those extremes. Use the numbers on the market grid. So if you have those numbers, look at the market grid. As I mentioned, I think S1, S2 would be extreme on the NASDAQ and on the S&P. And I think those are numbers you want to watch for. So anyway, thanks for watching. I'll be back tomorrow night, same time, 6 p.m. Eastern time, roughly. It's usually about 6:10, 6:15 by the time I can get everything set up. For some reason, I start earlier and it still doesn't work. Anyway, thanks for showing up. Appreciate it. As always, make sure you hit the subscribe button and hit that bell so you'll get notified when I come live. Thanks a lot. See you later.